First of all, I just want to say thank you guys so much for joining me. My name is David Worrell. I am an affiliate of the Robinhood Stock Market Watchlist. He lets me post in the Facebook, so I help him out with these meetings. We also keep you up to date on all the data, the economic data that comes out. I put it in bite-sized information for you. I have a YouTube channel. It's David Worrell. You can see it on my screen. I'm sharing that for you right now, baby. And if you guys feel at all that you would like to be generous enough to hit a like or a subscribe to my channel at any time, I would greatly appreciate it. Obviously, it helps me grow, it helps my community grow. And also, if you look in the description of any of my YouTube videos, you'll see that we have our own Discord. We come over here as a group. We have about 6 or 7 of us from our Discord. We come on over here to bring you guys the Robinhood Stock Market Watchlist YouTube video as well. So guys, hit that like, hit that subscribe. Everything I ask for you is absolutely free. Now, what I like to start out with is the state of the market. The S&P 500 is my benchmark because it is the benchmark for your overall institutional ownerships, okay? What up, Predator? Good to see you joined as well. We got plenty of you in here today, and it's just awesome to see. What a great turnout. What a great turnout. So anyway, the S&P 500 is sitting right now at 530.31. Okay, now I've been talking about wanting to wait to slam on that gas pedal. I've been telling you guys since we broke this 50-day moving average that we are risk on. But I also said we need to be careful. We can dip our toe in the water, but we don't want to slam on the gas because we're extended from the 10-day moving average. And if we zoom in here, and you guys can click on my screen, I'm sharing it for you so you have a better understanding. You can see here after we broke the 50-day, we are risk on. But I said we're a little extended from this 10-day moving average, especially after all of these gaps. When we've seen all these gaps up, I was expecting at least a little baby pullback to this 10-day moving average before we rip, tater, chip, and broke through this all-time highs. Now, that being said, there was only one time and one time only, and that was during the PPI data that came out. Let me go ahead and fix this for you so you can get a better understanding. And that PPI data, when that data came out, you would have seen, let me go ahead and do this. Sorry about that, guys. Let's look up here. So there was one point, and this was the PPI data right here. This PPI data brought you almost to that 10-day moving average. I mean, we were within $1 of that 10-day. That was your only time to really step on that gas. The only time to really step on that gas, okay? And that PPI data was bad. It was a little hot. Out of all the data that we got from last week, the PPI data was the only thing that showed that we might have an issue in the near future. And the market said, nope, hold my beer. We're going to buy every bit of this up. So you can see the institutional ownership came in and they just ate everything up on that pullback. So I can say for myself, I wanted to see the 10-day moving average pullback. I did not expect to see it happen during the PPI and it to be within 5 minutes for it to pull back and get bought right back up. But that's the kind of market we're in right now. Bad news, it just eats it right up. We're in a risk-on scenario, people. Risk-on scenario, and I can't say I don't absolutely love it. I really, really do. So keep that in mind. Anytime that you're going into the market, you need to understand where we're at. I told everybody in our Discord, in the David Worrell Discord, that when we break this all-time high at 524.73, that we're going to see some fear of missing out buying. Usually when we break these all-time highs, you're going to see people flood into the market, and that's why I actually took a bullish stance on the VOO. I also do long-term investing as well as the momentum swing trading, and I bought 10 more shares of the VOO, which if you guys aren't aware, it's just an ETF that follows the S&P 500. So right at this break, I added 10 more shares of the VOO for my long-term investing account, okay? Because I wanted to make sure I got on this pullback, I got enough where in the future it would be very fruitful for me, okay? And so that's just what we did. So just keep in mind, in the S&P 500, we are risk on, but we are still extended, okay? So what we want to do while we're extended and we start to get a pullback, if and when we do get a pullback to that 10-day moving average, because we're about to be in a power trend here, guys, meaning this thing just wants to keep on pushing, right? And if we get that and we continue higher, we'll go over the hot sectors that are out right now. I got about 3 hot sectors that are out right now, and you can put all these on your watch list so you can figure out what the best stock is for you. We look for relative strength, okay? We look for the hot sectors, and we look for themes. For an example, the latest theme was in the past 2 days, 3 days, 4 days, was the meme stocks. You had your GME, you had your FFIE, you had your AMC, you had your Reddit. All of those meme stocks really decided to take off. That was a theme that Roaring Kitty came in and punched a hole in the market, ripped up higher, and pulled back. And if you guys have any interest on my outtake on GME and all that stuff, I'd be more than happy to talk to you about it. I've missed the biggest short trade of my absolute life, but it's okay. Sometimes you miss them, but I can show you exactly where would have been the best spot to get in. And of course, it sounds like hindsight, but I had it marked out. Didn't think it was going to happen in pre-market. So that's your S&P 500, and you'll notice that the QQQs, which is the tech-heavy related, is in the same area, higher and also extended, so all-time new high. But we also want to look at the IWM, which is your small cap and your mid cap. Your small cap and mid cap are still trying to break out higher. We're into some resistance up here. It's trading at 208.08 currently, but also still extended from a 10-day moving average. But it's finally nice to see that all of our ETFs, all of our heavy ETFs are above their 50-day moving average, above their 200-day moving average, and all those 200-day moving averages are curling to the north side. So we are seeing breadth in the market, and how do I know that? Well, if we look at the RSP, which is the equally weighted S&P 500, you can see we are also on the same trajectory. You can see that we have the golden cross down here, if you guys are interested in that. We have the golden cross here, meaning we're in a bearish push down. I just use the 21-day moving average. Keep it simple, stupid. We broke this 21-day moving average. We headed much, much lower. Once we got above the 21-day moving average, I talked about the pullback at the 50-day moving average, and then we pushed up higher above it, pulled back, and then rip, tater, chip. Now, this is the equally weighted S&P 500. It's showing that there is breadth in the market. There's not just one ETF that's holding us up, okay? There is more than just one thing holding us up in this overall market. So things are looking good. So let's go over what old Carlos had in store for us. So actually, just before we do that, I want to bring up the economic calendar, okay? This is something that Carlos likes to do, and I think it's a great idea to do it. So guys, keep in mind, let's see, today is the 19th, so old Fed Chair Powell has spoken. It's not something that I brought up or that I streamed, but we are going to have the Fed minutes coming out. That's actually going to be very popular. So on Wednesday, the FOMC minutes come out. What is that? Well, when the FOMC minutes come out, they take everything that was said in the Fed chair meeting, and they're going to write it all down, and they're going to manipulate it in a way to give their listeners exactly what they wanted them to hear. So that when the FOMC meetings come out, at 2 o'clock on Wednesday, this can actually be very, very volatile. Even though it's just a transcript of what old Chair Powell had to say, it can still be extremely volatile because they will enhance the things that they want the market to hear, okay? Then we have initial jobless claims on Thursday, May the 23rd. That is also going to be very volatile. We want to see that we have more people filing for that unemployment. Why do we want to see more people filing for unemployment? If you watch any of my YouTube shorts, you'll see the exact reason why. The psychology behind it is if more people are filing for unemployment, less people are spending money, which means we have a higher chance of showing old Papa Powell that inflation is starting to come down. So it seems counterintuitive, but sometimes bad news is good news for the overall market, okay? Other than that, we have, the U.S. manufacturing, PMI, we have global services, new home sales, and durable goods. Those are all very important to watch, okay? I won't deny that. But I will say that they're not nearly as important as the CPI, the PPI, or Papa Powell's FOMC minutes, okay? So we don't have a crazy week ahead of us when it comes to data. But with the U.S. initial jobless claims, that is very important to keep our eye on that. And that's going to be on, what did I say here? On the 19th, was it? Sorry, guys. That's the 22nd. No, that's Fed minutes is 22nd. And initial jobless claims is on the 23rd at 8:30 in the morning. So make sure you pay attention to that. I usually have the video out on that and into the Facebook page or into our Discord, the David Worrell Discord, which you can join for absolutely free. I usually have that within 30 minutes to an hour so you guys can understand how the market should take this, how it's going to be ingested, and how it looks for the overall market. Okay. So now that we have a better idea of the market, we know that we are on a risk-on scenario, but we are extended. I personally am hoping for a pullback, and I say that in the kindest way possible. Of course, I'm rooting for America. I'm rooting for your 401ks, your Roth IRAs, any vehicle that is an investment vehicle for yourself, for your family. I want it to go higher, but when I look at the overall technical analysis on this and I look at this, we can see we are a little extended from this moving average. So just keep that in mind, guys. We are a little extended, okay? So let's go over some of the earnings that Carlos put in the chat. We have Target, so TGT. If we look at TGT, you can see we are on this downtrend here. I can make a very clear pattern for you right here. So we are on this downtrend pattern. I can make it a little bit cleaner, clean this up a little bit for you. So our breakaway is going to be above the 161. Target's earnings are going to come out on the 22nd. We want to see this thing not only break above this area, but we also have the all-time recent highs, I should say, from back in 2022, August of 2022, all the way up until now. It's had an area of resistance at 182.16. So there's two ways we can play this, guys. It can pop up on earnings all the way up here to 182, and then we can try to take a short there, or we can wait until it breaks above this on volume and take a base breakout trade to the north side. So there's two ways that I could see this working out. Now do keep in mind, Target is a slower mover at 1.9%. So that being said, this would be a nice trade, but it's going to be a bit slower of a mover, okay? All right. Next up, let's see what else he's got for us. ELF. So ELF is a very important stock. This was a recent leader here in 2023, the beginning of 2023. It also was a leader in the beginning of 2022, back in October, when we first started breaking off of, 2021, when we first started breaking off those October lows, we started heading higher, and ELF Beauty started showing very relative strength compared to the overall market. We had a nice pullback here, which would have been a great area, a bounce off this 200-day moving average, but this 200-day moving average just kept rising to the north side. So it's really nice to see this stock doing its thing. Now, we are showing that we have a base support down here at 160. Can it hold this? That's going to be an important scenario with the earnings coming out on the 22nd as well. So on Tuesday, we're going to see if this thing wants to rip higher. Now, do keep in mind, we don't play. I personally don't play. I know that Carlos and some of you have options trades where you do straddles, where you buy not just options, put options, but you also take you play it both sides, and then you sell whichever one isn't working out for you. I don't play the straddle. I don't play options. I only play this. I only buy equities and stocks. And the reason for that is I feel like I can identify my risk better, because I always preach risk management. So I can identify risk better, and I really just do feel overall, I really do just feel safer taking an equity, because when it goes against me, I don't have to worry about time decay or anything like that. That being said, though, I don't play earnings. I wait till after earnings to play, okay? I wait until after earnings and I react. I don't try and predict, I try and react, okay? So if earnings comes out and it just really gets going, it really starts ripping, I might wait for it to consolidate, either create a base or a trend, and then head higher, and I will play a trend, like say this right here. This had a beautiful trend. This is called an undercut and rally. It actually shows a lot more bullish strength when it breaks down and then has this daily wick where it gets soaked right back up and starts heading back to the north side. This was also a trend break. This here was also a base break. You can see we have a base of 1, 2, 3, 4 days. And when it breaks up above that base, you can take this to the north side. Now, I do have in my YouTube a trend break strategy, and we are also going to be doing it live this Tuesday. So in 2 days here, guys, we're going to do a base breakout strategy. It's been extremely popular in the YouTube. We've gotten a lot of compliments on it, and you can be a part of that just by hitting that subscribe button and joining our Discord, which is absolutely free. Of course, we're going to be coming back here every Sunday to help bring newer traders to help learn. So this is just one of those earnings, guys, that you want to keep on your watch list because you want to see what happens with it. It has been a leader in the past. Maybe this is its last and final leg because I like to think that they move in legs of 3. Here's your first leg. Here's your second leg. Maybe this moves up one last leg before hitting a blow off top and then coming back down once again. So let's see what else. We have Snowflake, which was a popular retail trader as well. Now Snowflake, you can see it's very clear. We have this base down here. And if I just draw this trend base, the only thing I don't like, as you guys know, if you've been listening to me for a while, this has a trade below that 200-day moving average. If it's below a 200-day moving average, it still has a lot of proving to do to me, okay? It's starting to make new higher lows, yes, but it's still below that 200-day moving average. There's only a few exceptions I will have on this, and a lot of the times it's can't have a ton of overhead resistance. I can see right here that there is a ton of this overhead resistance right here. So this is going to be its murky waters, and then of course there's this up here. So there's going to be some areas that it really needs to punch through. It needs to do it on volume. So let's put it this way. Another trade that I like to play is called an episodic pivot. I've learned this trade strategy from Chris Quilamagi, $1 million trader. What he teaches is that because this has been beaten down and broken down, if this earnings comes out and it surprises Wall Street and it rips up higher above all of this area of consolidation, then that would be an episodic pivot, and you can play an opening range break on the 1 minute or 5 minute. And if you guys want to learn how to do that, I can also give you a link so you can learn about Chris Quilamaghi's 3 timeless trading strategies. We have our whole Discord is into learning, okay? So if you're looking to actually learn and actually put in the time and put in the damn work, we're more than happy to accept you. That's exactly what we do, right? We put in the time, we put in the work. If you put in 10x effort, you will actually see some profitable results. So keep that in mind, guys. We're not just an alert system over there. We actually kick ass and take names, and we make our own damn money. All right, so we have Palo Alto, which is PANW, which is also another fan favorite. And you can see new lower highs being made on this thing, a big pullback. Created this nice trend here. The only thing I don't like about this trend is that it's not really following any moving averages. But now that it's popped up, you can see it's following this 21-day moving average, and now is following this 10-day moving average. So if this wants to ramp up, maybe pull back, create a trend, and a trend or a base breakout, that might be very nice for Palo Alto. This might be one that you want to keep on your watch list for the upcoming earnings. And guys, I'm really excited to talk about this one. I think this is on everybody's watch list. This is what everybody wants to know about. NVDA. Let me get a little sip, Shawana. Let me wet my whistle because this is going to be very interesting. Cheers to you, NVIDIA. Now, again, I do not play earnings. I react to earnings, okay? If NVIDIA comes out and it breaks the all-time high of 974, you bet your ass that I will be trading NVIDIA to the north side. Now, if NVIDIA comes out and it falls lower, I will be hands off until it breaks above this high, okay? Of course, I will be using risk management. I always use risk management. But where we are at, we have multiple trends on this thing, okay? It's holding this uptrend with earnings coming out. I don't think any of these trends or these base breakouts mean jack diddly squat. I think when earnings comes out, it's going to completely alter not only the stock's trajectory, but it's also going to move the market. All eyes are on NVIDIA. This is an AI theme. The AI theme has been very hot. The semiconductors theme has been extremely hot. And it's extremely hot in Michigan. Right now it's like 74 degrees and it's 9:30 at night while I'm trying to do this. I'm about to turn on my air conditioning. But NVIDIA is hot heat, baby. And if you can't handle the heat, get the hell out of the kitchen. NVIDIA is going to do things whether you like it or not. And I do have to say, nobody knows what's going to happen during earnings. I do hope they beat. I do hope they blow expectations out of the water so I can continue trading this. This was an absolute monster of a stock. Look at this base breakout at 500, guys. I'm waiting for another base breakout like this because I talked about this. I told my family, I told my friends about this base breakout. And when it happened, I didn't make nearly as much money as I should have on this. I did make some money, but I should have made way, way more money on this damn stock. This was absolutely a beautiful push here. And I'm just so happy to see it. You love to see new things come into this market and just make a huge move. Now, if we look at the overall heat map, you can see now NVIDIA is one of the biggest corporations out there after that push. It's right up there with Microsoft and Apple and Google. I mean, Google's two of its own blocks in its communication service, but I say Google and then all of a sudden my phone starts listening to me. It's like, what do you need? Because I use a Google Pixel myself. But you can see, it's bigger than Amazon. It's bigger than ExxonMobil. It's bigger than JP Morgan. NVIDIA is huge, guys. Absolutely enormous stock. So if this thing can continue higher, I do believe in AI. We're using AI. We have been using AI for a long time, and it's really moved the stock much, much higher. So make sure if you don't already have this on your watch list and you've been living under a rock most of your life, you need to put NVDA on your watch list because the earnings is going to be coming out on the 22nd. And you better believe if I have the opportunity, I will be streaming this live because this is going to be an absolute crusher of viewership. People are going to want to watch this. I'm going to want to watch this. I'm going to want to know what their CEO has to say, what new products they're going to come out with, how much they've made. I mean, guys, if we look at NVIDIA's earnings, let me just bring this up in front of you, okay? So NVDA. If we look at NVIDIA's earnings, you can see this trajectory. They're just constantly making money, right? And if we look at this, the annual, they're doubling and tripling their revenue. I mean, it's just absolutely amazing. Net income from 2021, $9.75 billion. 2022, $4.37 billion. All right, so from $9.7 billion income to $4.37, and then 2023, $29.76 billion, guys. That's nuts. And if you look at the quarterly, okay, from quarter 1, 2023, $2 billion, quarter 2, $6 billion, quarter 3, $9 billion, and then quarter 4, $12 billion. I feel like I'm in gold member right now. Billion, But no, they are killing it. And this is the growth stocks that we're looking for. This is why I tell everybody to read William O'Neill's How to Make Money in Stocks, because these are the growth stocks that we're looking for that we can make a lot of money in. So NVIDIA, absolutely killing it. Put this on your watch list for the earnings. Now, guys, I always have to bring up, if you like any of this, if you like any of the videos, I'm doing everything for you today absolutely free. There's only 2 things I ask for you. That is your time. You're giving me that now. The only other thing is to go to YouTube and hit that subscribe button on my YouTube. It's under David Worrell. You can see it on your screen right now. Just hit that subscribe button, guys. This is the only thing I do. I don't try to push any product on you. I give you my technical analysis. I bring you the data. I bring you everything for absolutely free. I do not ask for anything from you. No money, no nothing, just your time, and for you to hit that subscribe button on my YouTube channel. That is my way of surviving in this cruel, cruel world. So now we're going to go over a few stocks. We'll go over the meme stocks. We got RDDT. It came out with some information. The catalyst for it to move higher on volume here was because this huge volume blurp was because ChatGPT 4.0, if you haven't heard, they had an update, and it's way better, way faster. It looks so good. I actually used it for trading the other day. I wanted it to try and be my trading coach, and it did not fail. It did a really, really good job trying to be my trading coach. I interacted with it, and I tell you, eventually these are going to, I'm telling you, the first companion that it comes out with, where you can have a companion in your ear that talks to you throughout the day, I guarantee it's going to take off and people are going to make millions. So pay attention to that. That's my $1 million idea. When you get an AI companion that learns what you like and how you like to be talked to, and that somebody's going to come out with that, whether it's Meta or Google or Amazon, I don't care who. One of these guys, they're going to get a hold of some AI. They're going to come out with a companion that works with you. They're going to be able to, you're going to be wearing a watch, and they're going to see that your heart rate's going to come up, and they're going to say, hey, it's time to calm down. It's time to do our breathing exercises. And if you don't like to be talked like that, it'll say, hey, it's time to straighten up. I can tell that you're nervous because you have this upcoming test, but you've studied for this, and then it'll go over all the things that oh man, I'm telling you, millions of ideas over here. RDDT though, we're going to go over the meme stocks. RDDT is getting a high boost in volume because ChatGPT 4 is taking the information from their user base and they're plugging it into ChatGPT. RDDT or Reddit gets to get a piece of money from that. So that's why they're getting a nice little boost there. We have FFIE. I've been seeing this all over, so I just want to go over it. Guys, these are the things that you need to be careful, okay? So there's going to be people in these stocks, okay? There's going to be people in these stocks, and they're going to be pumping this up. Now, we might get a bounce. It might head higher. And you know what? If you want to buy in here, that's fine. Buy in at $1.13, but you need to have risk. You need to understand that your risk is going to be 75 cents or 74 cents or 50 cents, but at least have your risk in play. I'm not going to stop you from trying to trade this if you have a plan. I don't have a plan for this trade. The only thing that I could have played was this right here. I tried to play this. I was in this. I ended up exiting out of this very, very quickly because it was my trend break strategy. This right here, this is trying to catch a falling knife. I don't like this stock. I don't like that that it can completely break your account. But this FFIE is a stock. It is in play, and it does move 65.4%. Okay, so it's a make or break, rip your face off account. So be very, very careful with this meme stock. We also have AMC and GME. So AMC, why did it push up so high on so much volume? Because this has been diluted so many times. There are so many shares out there of this stock. So when it does move up, there's a lot more shares that are going to be traded. Now, not to say that this wasn't a very important move because this thing still moved up. Let's take a little peek off the lows here. It moved as high as 280% or maybe even higher. Yeah, even higher in the pre-market. So it moved up off these lows. Let's see. 320%. So that was an absolute beautiful move, but let's not take into account that there is all this overhead volume, guys. There's a ton of overhead volume. And now we're going to look at GME. And why do I have this line marked out at top here? This marked out at the top, well, I had Night Owl, I believe. I think it was Night Owl. That was asking about GME, and we talked about GME multiple times about all this overhead resistance, and all these gray areas are all this overhead resistance we talked about. Now, when it pushed in the pre-market, it came all the way up to $80 even, like absolutely perfect. Well, why $80 even? Well, if we look all the way back here on this stock, guys, I'll just blow this up for you, and we look at the highest traded volume ever on this stock, and we zoom in on this. You can see this purple line here. This is VWAP. This is the volume weighted average price being traded for this stock. And I just drew a line off the psychological area of $80. So it's a little higher than actually where that red line is. But I just drew it right around on where that line was. Okay, so you know where the volume weighted average price is, and now you know instead of trying to short at 78.63, you can say $80 because that's a psychological area. And look, if we zoom back over here, guys, you can see if we look at the hourly, this came right up and touched that $80 area, right? Look at that. Touched $80 and then failed fast and hard with a nice little pop here. That was a beautiful pop, and then failed hard again. A little pop, failed hard, little pop, failed hard, little pop, failed hard. Okay. Now, can GME pull back up here? Sure, it can. It's probably not going to get as high as 80 though, because 80 was its absolute biggest area of volume ever traded in the stock. So I don't see GME getting higher than 80. Now, you can argue with me all day. I'll just throw my hands up and say, you know what, you're probably right. I'm not going to argue about a meme stock. They can go higher. But from my technical analysis and my experience over the years and seeing how these work, you're not going any higher than 80. You're just not, because there's nobody else in it. There's nobody else to buy. If we get back up to 80 and break through on volume, then you've proved me wrong. But until then, I'm not bullish on this stock at all. okay? And that's just where I stand on those meme stocks. Let's see what else we got here. So now we're going to run through some other stocks. Most of these that you're going to see are going to be base breakouts or trend breakouts, okay? And some of these I am already in. We can go over that as well, okay? So we'll just go ahead and focus on the daily. And guys, if you guys have any stocks that you want me to look at, go ahead and write those down. After I'm done going through this, because it's 9:30, I'll go through my stock watch list for the next 5 or 10 minutes. And then after that, I'll open it up for any questions. You're more than welcome to put them in the chat, the stock market meeting room chat. There's a little chat blurb right next to the stock market meeting title there. You can put that in there and you can type what you want in. And I can pull those up, or you can unmute your mic. Just remember, you will be recorded for YouTube, so if you're not comfortable with that, just type it in the chat. So first thing is aluminum company, okay? Now, we know that silver's running. We know that gold is running. Yes, what's going on, brother?
Just to interrupt real quick, just to make you aware, when we come here to this trading room, there is no chat. Just to give you a heads up.
Well,
okay.
Oh, yeah. Hey, good call. Actually,
it's just to let you know. Yeah, I found out the first time we came up.
Dude, I have it pulled up, and I'm like, I'm surprised nobody's talking in this. Dan Bob, do me a favor.
That should have surprised
you can. No, I really appreciate that, Predator. Thanks, man. You're always helping me out. Dan Bob, if you can maybe figure out if you can change that, since you have the ability to do that, see if you can get it so we can actually chat in the stock market meeting room. Google that and get it figured out. And let us know if you come up with something. But regardless, guys, the chat is down, but you can unmute yourself just like Predator did. And you're more than welcome to get me to stop talking and give me the ticker that you would like for me to watch, okay? And I'll open you guys up for open mic here in about 10 minutes. So give me just like 5 or 10 minutes to go through these, and then we'll go. Again, thank you, Predator. I appreciate you, man. CENX is a aluminum. Now we know silver and gold is running, right? That being said, well, aluminum, that might be next up here, okay? And we have this area of resistance. Why? Well, look it's hit at 1, 2, 3, 4, and now 5 different times. It's getting really tight here, guys. It's trying to break through this high. It's trying to break through 18. And if it breaks through around 1831 on volume, you better believe that I'm going to be a part of this push higher. Not only that, but it moves 4.4%, so this is a faster mover. The real area to buy this was this beautiful trend break right here. You get this downtrend right here. You get a beautiful push higher. It held the 10-day moving average, and the second it stopped below this 10-day moving average, we would have exited out of this trade. I mean, look at this. This was just such a beautiful move. Here, let's just pull this off here to see how much money we would have made. 65%. 65%. Just imagine you went full account in this, or even on margin, right? You had $65,000 in this, and you make 65% on $65,000. That's a lot of money, guys, and I love to see it. That's why I love these trend breaks, and that is why I love base breakouts as well. So we're up here at this base breakout. Absolutely love that. This is FNMAS. This is a more thinly traded stock. I think you guys are familiar with it. This is a mortgage company. I believe the mortgage company is called, let me just bring it up, Fannie Mae, but I just want to make sure that's what it's called. Yeah, Fannie Mae. So this is a finance stock, rental or lease. So it's in there with the financials. And now if you guys don't know already, financials are hot. Financials are up there. You have Goldman Sachs, you have Wells Fargo, you have Bank of America. They're all looking very, very good. Some of them have broken out. Bank of America has not yet, but Wells Fargo and Goldman Sachs has. So this is on my watch list. When it broke through this trend break, you bet your ass I got myself a little piece of this. I'm not recommending that you buy this. I'm just letting you know that I have bought this. This big sell-off and buy right back up is what I call an undercut and rally. It shows that it's even more bullish than what this pattern is showing me, because it's showing you right here. You can see this beautiful uptrend as well, and then when it undercuts it and it comes right back up, gets bought right back up, that's institutional ownership buying this thing up. So I'm in it to win it, baby. I bought in here. I'm risking the same day's low, which is also the 10-day moving average. And I just sit back and wait now, guys. when this thing moves up to R or to risk multiple of where I bought it in, which will be almost at these highs at 481, I will most likely reduce some of my share size, but I'm waiting for that bigger expected move to around $6 to remove half, and then I'll use that 10-day moving average to cut the rest of my trade. So it's looking really good right now. I do like this little breakout area, but tomorrow it might pull right back down and stop me out. We'll see. But right now that I am in that. I usually don't talk about stocks that are below the 200-day moving average, but I like this little breakout. We have this big downtrend. We had all this horrible, horrible talk about Boeing. And when people talk so bad about Boeing and a ton of people start piling in short, I start to try and play a counter. So I'm a contrarian type of trade here. This is a quant trade, a contrarian type of trade, where if everybody's betting against it, a lot of times that trade's not going to work. So now it's going to break above and head higher, possibly. But remember, guys, these are my ideas. They're not yours. You can make them your own, but remember, they are your trades. We have BVN as well. So let me look up BVN and see what sector this is in. It's important to know what sector because you want to be in a hot sector. This is non-energy minerals, okay? So it's a precious metal, so it's in the silver, gold, aluminum kind of area. You can see that's got this nice V-shaped trajectory for its net margin, so that looks pretty good. Annually, it's iffy, meh, the development and exploration of mineral properties, so it's a miner, I believe. So this is a nice stock. It might be able to break out here. It's already had its earnings, so we don't have to worry about that. They did well. They doubled up on their earnings, so that's also good news. So if it can break this top of $18 and do it on volume, that's something I would really like to keep my eye on. So BVN. ASPN, I just wanted to show you guys this because this thing really ripped. This is what's considered an EP. They were expecting 0.12. They came out with 0.02. They had a much, much higher volume, and then this is the continuation. I got a buddy who played this, and he is just printing chicken tenders off of this thing, so it's looking really good. This one already broke out. We'll go through a couple more of these. GTHX is showing a nice trend here. I do like this trend because if it breaks out of this trend, it's an early buy for this base breakout. Okay, you had a huge volume push here, big push up, got sold right off, created this trend, and if it can hold a 10-day moving average and then break its trend and start to head higher, this can be an early buy using that 10-day moving average or using the same day's low as your risk in order to push up higher and break this 10-day or break this base breakout. That would be absolutely beautiful to see. So that's GTHX. Now that is in a therapeutics. I know healthcare is doing well, but I don't think it's the hottest sector. Since all of January was mainly the therapeutics and the biotechs and stuff. So how long can that run? I don't know, but I am looking at hotter sectors. But that's definitely one to keep on your watch list. Now this is another trend breakout. It's also in the therapeutics. It's holding this trend right here. It's getting tighter now, and now it broke up above this area. If it gets above, that same day's high, I might take a long in this as well, risking that 30-day moving average or the previous low. The reason for this is I like the push here. The reason why I didn't buy it that same day is because the volume really wasn't there on the 5-minute. I'll just show you what I mean. So if we look at this, this is the 1 hour here. You can see there's not a lot of volume coming in on this. And when it came up and broke above this previous day's high, if we look at the 5-minute, this is where I like to take my trends. You can see it's just barcoding. It's really choppy. We don't have a big volume push here, so there was no real time to get in. So I just reset my alert for a little higher, so that way if it wants to break out, and then I can zoom in on the 5-minute and I see a high volume blurb that comes in, that's going to be a better area for me to take my risk. So I can use that volume blurb. I want to be in with the volume, right? I want to be in where the money costs the least amount. If we look right now, the spread is 31 cents, right? I want to get in where it's only a few pennies, where there's people, there's bulls and there's bears arguing for the price. Because then if it breaks to one way or the other, I know if I'm right or if I'm wrong. And if I'm wrong, I will be wrong for a small amount of money. But if I'm right, I can be right big, right? I can be right big and and exit out of some of my trade at the top here. It's just risk management is an edge, people. Risk management is an edge, so keep that in mind. SHIP, I'm just keep continuing to watch SHIP. We ended up exiting SHIP after this base breakout. We made some good money, but we exited out of SHIP this day at the end of the day because SHIP had earnings the very next day. Okay, so we exited SHIP the day before. Earnings did some crazy crap on there, and then they moved higher. So we exited during the earnings because you never know what's going to happen on earnings. It's a gamble, and then it pushed higher. So it's nice to see SHIP is continuing. IREN, this was a daily trend breakout that was absolutely amazing. I did end up playing this. I ended up playing it intraday, so it moved up. It broke up higher. I wasn't part of this, but I continued to watch it the rest of the day, and I ended up playing this trend breakout to the north side. So it was nice. I made some good money. I actually ended up exiting most of my position at the high of the day, and I let some of the rest ride, but on this pullback right here, I'm sorry, let me see. Yeah, I exited most of it here, but on this pullback here, I moved my stop up too high. So it ended up exiting me out for the rest. I made some good money, but I'm not in this trade anymore. But it's nice to keep these on your watch list so you can always look back and go, damn it, I wish I still had my money in this, you know? No, it's so you can learn from it, guys. You always want to learn from these things because if you haven't been with me a while, I'll always say this. You are a loser unless you're learning. And that's the damn truth. You are a loser unless you're learning, okay? And I learned from this trade, you know, why? Why did I bring my stop up higher? Well, because I was afraid of losing any more money, right? And if you're afraid of losing that money, even though I made money in this, even if I brought my stop to break even right here, I'd still be in this trade. I'd still be printing these tendies. I'd still be up wildly more than what I was. And I could sit here and brag that I'm still in the stock. But I cannot do that now, and so I need to learn, and if I don't learn, I'm a loser. CGC, they had some news catalysts. You know, keep in mind their earnings are coming out very soon here on the 30th. But CGC, Canopy Growth, I believe in this stock more than I do Tilray, but I don't believe in any of these because any pop that you've ever seen in any of this just fails, okay? Now, it is above a 200-day moving average. It is creating new higher lows, and the 200-day moving average is starting to curl to the north side. So those are all positive influences on this stock, but you need to keep in mind that this new scheduling class doesn't mean jack crap for this stock, okay? It doesn't mean that they're going to be making more money. It doesn't imply anything except for there's a new rescheduling, and these things can take a very long time, okay? It's got to go through Congress, and it's got to get approved by so many people. Nobody knows what's going to happen to the stock, okay? Also, PDD, shout out to you, Zamora. I want to say I appreciate you. Zamora had me make some money in this stock. I exited out probably a little premature, but I played this base breakout here. I got a little bit higher price than I wanted to by $1, so I kind of chased it a little bit, but I believed in it, and I held on to it for about a day, and then I exited on this big push. I think that I really think this thing can really get up and go. I think it can have some continuation, but now it's a little extended from that 10-day moving average. So, you know, we kind of got to wait to see what's going to happen here. But this is nice. I do like it, and we want to see if it wants to continue higher. So if it can form another trend or a base, I might want to hop in that. And there's so many more stocks we could go over, guys. I'm in ONON. This thing traded sideways. We had a base breakout right here at 37.26. I got in a little higher than that. You can see the green line where I got in here. So I'm just holding on to that one. We're going to see what happens there. Let's see what else. What else am I in here? Let's see. Nope, that's about. Oh, Google. Yeah, we should go over Google and just a couple of the other stocks. And then if you guys have some tickers ready for me, I'll be happy to go over them. So Google, if you guys look at Google here on the daily, you'll see that we have this trend break. We have this trend break here, and this trend break looks absolutely beautiful. We have this undercut, this bounce off the 21-day moving average. It rallied right back up, and so I decided to get into it. Now, I took 100 shares of this, and it pushed up higher. When we were up about $500, I decided to exit half of the trade right here at all-time high, which now all I do is sit back and relax. I'm going to use the 10-day moving average as my stop loss. So even if this thing comes all the way back and closes below the 10-day moving average, My 250 shares, I'm still going to make money on because it's still above my break-even price. So my trade has worked out very, very well. A beautiful trend break. And if you guys were in my Discord when we were doing our Discords in the morning rather than the nights, you guys remember me talking about the market was having that 6-day bloody sell-off, right? This thing just traded sideways and stayed above a 10-day moving average. There wasn't another stock that was out there that was as strong as Google that stayed above the 10-day moving average that was in the tech industry. Google did that exactly. Now, of course, earnings came out. I always say earnings ruins everything. It did this big chop fest, right? Sold off and then got bought right back up. It digested and then created this trend. I got in this trend. I got out half of my shares. And now that last half, we're going to hold on to that until it breaks this 10-day moving average, which then shows me that its momentum is starting to slow and it's going to pull back, okay? So that was a big trade on my end. You know, we're up, I don't know, $600, $700 on it now, but we'll see at the end. You know, I'll let you guys know what we ended up making on that. So, you know, watch the banks, the bank sector. So you have Goldman Sachs, WFC, you have BAC. Of course, you guys want to watch your chips, you know, MU, NVDA, Taiwan Semiconductor. Let's see. You can also keep an eye on M-Chip, which had a breakout, daily breakout. Let's see. AMAT. AMAT's another one that you guys can keep an eye on. That's another chip sector. It came back down, actually. It had earnings. The earnings brought it back down. And now if it can break back out of this base, that might be a nice area to get back into it. But all of this is going to determine in the chip sector, it's all going to determine on how NVIDIA does, because NVIDIA is the leader. So if NVIDIA does well, then AMAT and Taiwan Semiconductor, M-Chip, MCHP, those are all going to do well. Keep in mind that energy is doing well. CEG, let's see, XOM, what else do we got? I think that's all I got off the top of my head. Of course, gold, silver. Then, of course, you got Sweet Green. So, guys, this is a big one here. Sweet Green does not want to pull back to its 10-day moving average. If it breaks out of this trend right here, I'm going in. I'm going to go in. I'm going to risk the previous day low, and I'm going to go full risk on this. So I'll probably risk $300 or $400 on this trade, just because Sweet Green, I believe in this concept. They don't have a lot of overhead risk. It's in a hot sector, and it's doing absolutely amazing. So I do like Sweet Green, but remember, this is my trade. It's not yours. And, you know, we have Kava, we have CMG, we have Wing, we have Eat. All of these are in this food sector, this restaurant sector, so keep that in mind. Let's see here. Oh, look at that. Look at the time. Thanks, Dan Bob. We got about 10 more minutes. So, guys, instead of going over all of these, because I have so many on my watch list, but most of these I just have alerts, why don't you guys let me know, do you have any tickers that you want me to look up? If you do, just unmute your mic and give me a shout. Let me know what you got going on, and I'll be happy to look this up for you. If not, forever hold your peace, guys. No, nobody? Y'all just being shy? Because last week, man, I tell you, it was one ticker after another. All right, well, that being said, we'll go over the other hotter stocks that are in this. So, guys, keep in mind the VIX Volatility Index. This is your fear gauge. We have not been at this area since the 2020 lows, okay, pre-COVID. This is a beautiful sign, because if you guys remember in pre-COVID, when it came to, let's see, let me look it up. What is it? Inflation data. Let me bring this up for you. So pre-COVID, if we look at back in 2021, you can see pre-COVID, we were down here at an interest inflation rates below 2%. at some time. I mean, we were well below. So if the VIX volatility is coming all the way down to 11.99, and that is the pre-COVID lows, that's a really good sign that inflation is going to continue to come down, because the volatility is showing that people have less fear, that things are doing very, very well. Let's see. We have GL and DFH. Sure, I can go through that, brother. So Predator's mic must be down. I hope everybody else can hear me just fine. But you said, let me just bring that back up. GL. So GL, we have, yeah, and if you guys are talking but I can't hear you for whatever reason, you can just private message me and we can go over it. So GL, the first thing that I see here is that we're below a 200-day moving average. We are creating new higher lows. So we got, we got this one here, we got this one here, and it looks like it's trying to create one here. So 3 new higher lows. It might be forming a base here. It's not the cleanest setup, but it is doing its thing. Now, why did it have this huge sell-off? We want to know that. Why did it have such a big sell-off? What sector is this in? So if we look up GL, you'll be able to see. You'll be able to see that it is in the insurance. So this is finance, so that's good. It does look like they have, decent earnings. So they must have had one of their bigger investments leave. So what they engage in the provision of individual life and supplemental health insurance. So I would say personally, I don't like these stocks. Just me personally. They are creating new higher lows here, and if it forms a base or a nice trend, it might be worth a shot, but it's below a declining 200-day moving average. So I don't really care for it, Let's see, we got another one of you reaching out and saying CGNT. Now this is nice, so I like this. This isn't that big of a pullback, but then it bounced right back up. It doesn't have a ton of overhead resistance, and it's forming this base right here. So I like this. I'm going to go ahead and set my alert right above that. This is in software. So software has been doing good lately. So it's nice to see that. I don't know what the hell is going on here, but a big sell-off here. But it's above a rising 200-day moving average. It's above all of its other moving averages. And you can see we have the 21 crossing over the 30, which is, they call that the golden cross, right? When the 21 goes over the 30. So this is looking really good. It's looking really productive. It's starting to get tighter here. It's having a couple of inside days. So that's what we want to see in the stocks for base breakouts or even trend breakouts. So very nice call on that one, Dan Bob. Let's go to Mo Wealth. Mo Wealth asks, can you look at these? Let's see. I'm trying to see the ticker. Can you send me the ticker names? Because I'm not seeing the actual ticker symbol in this, and it would just make it easier since it's really tight. But I see that you sent the charts with it too, and I love that. I appreciate you doing that. Just send me the first one, that Elime Therapeutic, ELIEM. Maybe I can figure that out really quick for you. ELIEM. Okay, so ELYM is the ticker. And look at this, guys. This is what we're looking for, and this is why we create a community. Pay attention here, guys. This is the whole reason why I want to create a community. Mo Wealth has just joined us pretty recently, okay? And he's been studying every single thing that I put out. He wasn't able to make it to the morning chats. So we started doing chats at night, not specifically for him, but because that's the way it works out. But what he would do is he would take the recordings in the morning and he would study these, and we would go over. He started training his eyes, started setting up his scanners, started doing all of this. And now look, he's bringing me these beautiful, beautiful stocks that I want to be made aware of. Huge push up, pullback, a big bounce, and now a pullback, creating this really tight trend here. This is beautiful. This is something that I know for a fact, if we go to the hourly, we can see this a lot better. So let's go to the hourly here. Look at this. This is what we're looking for, guys. This is a beautiful hourly trend. We can even fix this up to make it look even prettier, put some makeup on it right here. So if it breaks above this trend on volume, I would like to see this thing break higher. It's trying to hold this 10-day moving average or the 21-day moving average. You can see from down here. This looks more like a Chris Quilamagi setup. If it can hold this area, maybe have a few more tight days here, 2 or 3 more tighter days, and then break out on higher volume, that would be a nice look for this stock. So I like ELYM. And we also have RYDE. And of course, guys, we're going to be wrapping it up here in just a few more minutes. So make sure if you don't, or you haven't already, and there's something that you want me to take a look at, let me know. We want to make sure that you're well prepared for tomorrow at 9:30. RYDE. RYDE is looking really good. It looks like it already had its trend breakout here. This is looking like a nice trend breakout. I do like this. RYDE. This is a faster mover too, guys. 17.1%. It looks like it's already broken out of this area. Nice bounce off that 10-day moving average. This is kind of what we're looking for, guys. You get a big push up, a pullback. I like to see it ride on the 10-day and get tighter than this, but it did break out of its trend. It is moving higher, so it is showing some very nice movement on this. It's also a newer movement, or it's a newer stock. You got higher volume coming in here, and there's no overhead resistance. Once it breaks out of this $830, $850 area, you're going to see this thing push even higher if it can get through with volume. So I really like this stock. This is really nice. I'm going to set an alert right here, and I'll look back into ride when it pops back up. And then EAT. Yeah, we were going over EAT earlier. So this isn't a hot sector. I like this. It moves 3.3%. It's in the hot sector. What's that hot sector? The restaurant sector. Okay, you want to see the restaurant sector. You want to see it go higher, faster. So this looks really nice. It's just extended here. It's forming a small base at the top here. Okay, we need to give this more time though. I can't get into this thing right now because by the time I get into this thing, it's just going to fail. It's going to come all the way back down, retest the 21-day moving average, form a trend, and that's when I'm going to want to get in. So if this thing goes higher, I have to let it go without me. If this thing pulls back, I keep it on my watch list like I have already, and well, we'll see what's going to happen. So that's also a nice, very nice stock. Very, it's I want to consider it a leader, but it's definitely up there. Yosef, David, GDX breakout in Friday. NEM can break out. What do you think? So let's take a look, and this is going to be our last one, guys. So GDX already looked like it has broken. Oh, hang on, timeout. Yeah, it does look at it already has broken out. So we have this base right here. And you can see it stayed within this base, got really tight, broke out, came back, retested this area. Just like you guys will learn, I love retest. And then it broke this other mini base on top of it, and it broke out higher on volume. So GDX is already on its way to the north side. That is in the gold sector, and it doesn't look like it has any more resistance until we get up to that $40 area. So we can watch that thing continue to ride. Gold, silver, it's all looking hot. And then Yosef also said NEM. So let's take a look at NEM. So NEM's down here. Let's take a look. So this is Newmont. I believe this is in the gold sector as well. Let's just take a little peek. NEM. Energy minerals. So I think this is precious metals. I think this is probably in the mining sector. Let's read about it. Exploration and acquisition of gold property. So it is gold. This is a miner. The miners are doing really well, and this is a base. This is a nice base right here. So it's not a leader, but it is showing a nice base here. And if it breaks above this base, it might be one that we want to really take a look at. I mean, this is looking really good. I like it. I do. I like it. So if it breaks out of this area, I might actually take a bid on this, Yosef. I really like this. Yeah. Now, I will say it does have a lot of this overhead resistance here. You don't like to see that, but this is a base. It does look nice. I think there's probably some better trades in the gold sector, like HMY, but it kind of already broke out here. A nice base here. Kind of already broke out, so you can't really play that. But you can see, like, if you look at this little section here, it's going to look the same as NEM. Watch this right here. See this? It's setting up just the same. So I don't know. It might work out. I have my alert set. If it breaks out higher, I might take a small trade on that. It does look good. You can see there's a lot more volume coming in than usual down here, and it moves 2.9%. So it's not the fastest movie either. I feel like if you're going to look at a good stock, you're going to look at a faster mover like HMY is the one that I've been telling everybody about. It moves 3.4, so a little faster, not that much faster, but a little faster. And it's got this nice base breakout. It might, it actually just breached, it looks like, the most recent highs. So if this thing can get going too, that would be pretty nice as well. So I'm going to set my alert on both of those so I can get nice and distracted in the morning. But all right, guys, that concludes our time. It is 10 o'clock. There's one last thing I want to say. Thank you so much for being here. I appreciate everybody in the Robinhood Stock Market Watchlist joining up tonight and lending their ears so I can do my work. If you guys haven't already, hit that like, hit that subscribe button. If you want to, you can join my Discord. You can reach out to Dan Bob. You can directly message him if you want the link, or you can go to my YouTube channel and go to the description down there, and you will find our link in the description of any of those videos. We will be having a stock market meeting tomorrow, right at 9 at night. Tuesday, we'll be learning about that base breakout strategy. I got quite a few guys in there to help me with that because I'm not the only one that plays those base breakouts. But guys, thank you so much for being here. Appreciate all your time. I hope you've learned quite a bit.
I have one question.
Sure, what's up, bud?
What is the meaning of double top?
Double top. Yeah.
Yes.
Yep, that's the name of it. A double top play is just where you have a double top. You can find them on any different time frame. You can see a double top on the hourly. You can see it on the daily. Depends on what time frame. But a double top just means that, like, if you want to look at this, I'll blow this up for you. So this looks like a double top right here, although it broke its double top. So if we zoom in on this, you would say this is a top right here.
Yes.
And if this stopped at $9.80 right here, that would have been a double top. But because it broke through it, some people might consider that a double top still. But because it did not stop right there at that $9.80, I don't consider it a double top, right? You could consider this down here. This would be more of a double top or a triple top. You have one top here. You have two tops. You have three top. A triple top, or what else you can call this, is an area of resistance, okay? Whatever you call it, you can make it your own. But if you're new to learning, think of a double top as just an area of resistance where the next price came up to it in the future and hit that same area close, if not at the exact same price, okay?
Okay. The reason why I asked was because there was a stock and somebody said, oh, it's a double top, I'm going to get out. And then all of a sudden the stock just went all the way down.
Right. Well, there's a few reasons for that. One, that's an area of resistance, like I just told you. And it depends on what time frame you're looking at, right? So if you're looking at a faster moving stock and that's an area of resistance, then and your time frame is on a longer time frame, then you might want to exit some of your position, because a lot of times those breakouts at the top, if they don't have a base that's formed, that's where a lot of your people who bought at the bottom are selling into that top because they're worried on that pullback. So yes, you're going to see it. Now, does it happen all the time? No. It depends on the market's conditions. It depends on the sector, the theme, the ADR, the base. There's a lot of things that go into a double top. But if you just say blindly a double top, it could be anything. If you're looking at a small cap, a double top might be very, very scary. It might be a very scary area where you would want to get out. If you're looking at like NVIDIA and you're looking at a double top, you're probably just looking at a pullback before it forms a base to make a breakout. You know, it really all depends. It really all depends. But that's a really good question. All right, guys. Yeah, you're absolutely welcome. Thank you for the question. All right, guys. So that's going to conclude our time. Thank you guys so much. Make sure you hit the like and subscribe. Join the Discord. I will be doing another meeting tomorrow night. And we always do these open mics, baby. That's what we love to do. So thank you guys so much. And I hope you have an amazing night. This thing will be up on my YouTube in case you need to refer to it at any time. If there's anything that I said that you have questions on, or if you just want to see how my analysis does on all the tickers that I called out, I absolutely recommend you do that because I like to be held accountable. Actually, I love to be held accountable. That's a big reason why I've gained a following, is because of my market direction and our outlook. So thank you guys so much. I hope you have a great night, and we'll talk to you very, very soon.